then. All right, so let's go, everybody. I know it's kind of early in the morning today, but today I just want to kind of go back in the back in time to where when people are like um, covering GME, and usually it's just like I mean the take. Sometimes I'm like, why is people think this way? Now, I'm so sorry about the kind of setting. I have a different setting on my microphone. So, my last live stream was a bit kind of off, so I don't know what's going on. Um, so I hope this particular setting is a lot better. We'll see. We'll see. Okay. Okay. So hopefully you hear me better. If not, we'll see. Play out here. Hello. I just feel like terrible, terrible. Okay, so let's look at this video real quick. Of course, this video was back 6 months ago. So I wanted to kind of point out, right? And of course, this is what happening. I've been showing this video before, but it's worth revisiting on how the media usually right? When it comes to GameStop, it's just something I've noticed. There's a lot of biases on the media's part, right? They don't even bring anyone who talk at the very least bullish case for the company, right? And that's usually a red flag to me because if you are just so one sided, you're not gonna understand what the other side is telling you, or you know, even the evidence shown otherwise, the company is improving. You still have those skewed point of view of how this company used to be a certain way. Um, but that's why it's so baffling to me that anytime the media um, give a thought to GameStop, it's always negative, right? So this one is the segment. So this is before or right before or after. Um, it seems like it's right before GameStop closed the earnings over here. And mind you, this earning actually was a good earnings. It's just that the top line revenue was down by $100 million. That's what they were focusing on. Never mind the fact that we were able to break even at that time. Okay. Uh, hey guys, whoever this be, I can't hear you well. Oh, I'm so sorry. I know. I'm trying to change this. Let me try to change it. How is this? Better? So sorry. You're welcome. I mean, welcome to my chat. Anyways, can you hear me better? Okay, so hopefully you could hear me better. If not, I don't know. I'm trying to get a different setting here. My microphone has been acting up, so I don't know. Or it could be my Wi-Fi too. It's been acting up as well. So let me know if you could hear. Okay, yes, better. Thank you. Welcome to my channel. So I'm just revisiting, what the media was saying about GameStop. And again, this is what it's a learning experience, right? Anytime there's negative on some side, and you want to kind of look into it a little bit more. So let's see. This one is the segment. So let's listen in and see what this person is saying. Of course, this is like the past, right? But it's worth kind of learn from the past and see how the media will cover GameStop from now on, right? I'm sure there's going to be a shift here, and before the shift happens, they're not going to tell you good things until it's blatantly in their face already, right? Until it's to the point where institution already accumulated the lower price and then they want to pump it to you. So That's my thought, my projection here. So let's listen in.
Out. I get it. I see what's happening there. We'll move along to GameStop then, which is down nearly 20% this year, but coming off a retail-driven rally at the end of November. Obviously, it's been levitating. Wedbush watching the shift from physical to digital download games and softening holiday demand for other hardware like the Nintendo Switch. Retail investor activity, of course, always a driver of the share price. What do you do with this one, Lee?
I'm going to try to be mature about this meme stock. Let's look at the last 5 years. Our compounded annual growth rate is negative 7%. Our cost of revenues is going up, not down. So they have got to pay more and more.
So cost of revenue going up, not down. Again, I point this out before with this guy. I'm just like, okay, cost of revenue went up, not down. If you look at the balance sheets, it says otherwise, right? And this guy is lying. Or he's just ignorant about the sheet himself. GameStop has decreased in cost of revenue even today. I mean, if you look at, hold on, trailing 12 right here. Balance sheets, right? No, income statement, sorry. If you look at the cost of revenue, right? It's decreasing from the last 5 years, you said? I mean, he said, mind you too, like to compare the last 5 years, keep in mind, Ryan Cohen just got in here 3 years ago. And of course, this guy, it support his thesis, right? Without looking into any evidence base whatsoever. And so he would love you to compare it before Ryan Cohen got in. But even then, look, cost of revenue, like, is that increasing or decreasing? If you look at, some years increase, like, for example, this year to this year, sure. But from the time of which he was covering this company, it's decreasing, right? And so again, to me, that's just misleading the audience here. And they have much more of a platform to mislead people into believing otherwise, right? Or believing the wrong thing about this company. So be vigilant, right? Just because they have the platform to tell you otherwise, it doesn't mean that they know what they're talking about. For me too, I'm don't believe everything I say. I might misinterpret what it means to have cost of revenue going down. And so come up with your own conclusion and you will understand why people are so negative about this company. Anyway, so, and then of course, if you look at the trailing 12, I mean, trailing 12 is just give you a better picture on the trend of this company. Because if you do, look, if you do quarterly, you might not understand where the company is trending, because if you look at this negative, like from positive now to negative, that is the confusion part, right? If you don't understand the business cycle of this company, you might say it's like, oh yeah, they used to make this much, now they're losing this much. Mm-mm. Um, for GameStop, quarter four is the best quarter, right? And any business cycle, like some businesses are like some quarters are better than others. If you look at it that way, so just be aware of that. Okay, let's continue.
More to make a buck. When you look at the only thing that grows about GameStop over the last couple of years is the collectibles line, meaning that the place where they really do well is selling more Pokemon cards and what are called Funko Pops, which are these little plastic doll things. But when you look at the ads and you look at their website, it's not about consoles, it's not about Fortnite, it's not about Call of Duty, it's about little plastic figurines and trading cards. Everything else is going down with this ship. They even, did they even get a COVID bump with all that stimulus money? No, they couldn't even do that right.
Of course we got some bump over here, like COVID money. Look at this, okay? Again, this guy is just talking out of his ass here. So see, there was a bump of revenue increase. That's the COVID money that he was referring to, right? again, it's just that we had way too many stores, we have way too many operating income right here lost, um, because we had too much store to taken care of, like um, uh, what is it called? Overstore. Um, hey there, Donkey Kong. I know. Everybody is exciting. Okay, so if you look at that particular point of view, right? He's talking about how the website doesn't focus on anything much to like console or anything like that, right? And it's like, oh, they're only focusing on collectibles and all that stuff. No, that's not true. I mean, yes, this is the most recent development. A couple months ago, we were going into the trading cards and collectibles, like valuable collectible here, um, that are grade 10 to 8, right? And these are like valuable assets to have in the book. And then, yes, this is the banner that they are using to promote other stuff, not just, Funko Pops and all that stuff. And, these arms of collectible or category of sales, it's remained to be seen how well it's going to do, over the years. And so this is going to come out on Q2 balance sheets. I'm curious to see how much they're going to be able to kind of rack up. But I mean, just think of the concept of buying and selling, right? You're able to turn in your card for cash or store credit. I mean, what is there to lose? Like, let's say I'm just beginning, like collecting all of these, baseball card, football card, all of these players over here. I'm not a sport person, so I don't know how these things work. But I'm sure if you go look up people enthusiastic about turning like Pokemon cards and all that stuff, these are valuable. Look, I mean, $400 and $200, and all of that is going to come to the company bottom line as a middleman of buying and selling. Yes, you might get less value for your card if you're not, you know, but it's the convenience, right? The convenience factor of it. Some people will forfeit the convenience of or inconvenience of selling it yourself. Finding buyers for yourself, posting the post yourself, and uh, sorry, GameStop will take a cut on that. So I think this is a good business, a smart way to go about, you know, uh, collecting or for the collectors out there, right? And now you have a market that perhaps is going to give them a lot more customer, a different type of customer. Um, and not only that, they sell Pokemon card, right? I'm sure they sell baseball card too. Well, I don't know how baseball card works, but Pokemon card, like collectible items and other stuff as well. And the fact that they're like, oh, digital store, like everything is so digital. Well, they have the digital right here. I mean, come on, you could download it if you want to download your game. There you go. You could do it on GameStop website as well. And not only that, you get 5% off. I think that's value created that people don't even understand how that will work. And then guess what? Now we have credit card. So to me, leadership has been doing everything they can to collect, or to have people shop on their store. Very very smart, right? Okay, let's look at this guy over here.
So I don't have a lot of faith in this company. I'm not saying you should go short it because, again, it's a meme stock. What I would do is I would walk backwards and walk far, far away and find another company to buy.
All right.
Oh, okay. Find another company to buy. So which one is he wanting you to buy?
You're doing the moonwalk away from that one. Maybe to Dollar General, which is down more than 40% this year,
General.
but off of the...
Okay, so I bring this one up before. Now, Dollar General, mind you, has a lot of what? So let's see how well it's doing here. Dollar General. And this was 6 months ago. Hey, sis. Thank you for joining. Hello, hello. Okay, Dollar General. Okay, look at that. I guess he's the smartest person in the world, right? So it is a buy. A lot of analysts want you to buy into it. So what's the problem with Dollar General, do you think? Hold on, let me look at the chart real quick. 6 months ago, December. So yes, you would have, if you take profits over here, you would have like increased your holdings. But if you're held until now, you would have been down, right? So 6 months. Let's do this one right here. When did he cover that? October, December, right here. December 6th. So he tell you to buy up here. Yeah. And yeah, you would have like, so when the minute he told you to buy, look what happened. Dip right away, right? So if you were to be like, okay, let me make some money over here, you would have been kind of like hardened by the fact that the stock went down. But if you are a long term holder, you might not feel that pinch too much. But let's look at this stat real quick here. Dollar General current ratio 1 to 6, not too bad, right? Debt to equity ratio. Look at how much debt they have compared to GameStop, right? A lot of debt, like twice as much. So what does that mean? It means that this company is over leveraged on debt to their asset. I bet you anything, the interest payment is through the freaking roof. So let's look at that. There you go. Remember, negative means you receive interest. Positive means you're paying interest into whatever debt you have. So this is a trailing 12, $300 million plus on just interest payment alone, right? Now, thank goodness they have a higher operating income, right? Sorry, higher gross profit than positive operating expenses. Sorry. Emmanuel, thank you for joining. Okay, so free cash flow, cash flow, well, right, $1 billion. But again, like that debt is going to come in play at some point in this company, right? Think about like economic downturn. How is this company's going to survive when people are not, able to buy things from them? I mean, you could argue the same way for GameStop, right? But GameStop has the ability to invest that cash that they have, like, and doing nothing at all to just get interest payment, right? $200 million. Like if they put all $4 billion in just marketable security, I mean that's like a strong balance sheet right there. Um, and look at this net cash position is like it's stupidly high in my opinion. Goodwill value, look at this, $5 billion. Um, what else? So if you were to subtract goodwill value to the shareholder equity, you would only comes out to be $2 billion. So that's, in my opinion, this is how I kind of like see it: is that shareholder equity would only be $2 billion worth of this company. So it's not a company that I would want to buy into. Yeah. Um, just my thought here. Of course, my own assessment might be skewed one way because anytime these people put in front of me telling me to do something, I'm like, I'm questioning. I'm questioning it, especially when they're trying to skew GameStop into something that it's not, right? saying that cost of revenue going up, not down. This guy is saying, and when you look at the balance sheets of GameStop, it's the opposite of what he's saying. It's like either he doesn't look at the balance sheet himself, or he just maniacal in trying to mislead you into thinking otherwise, right? In my opinion, of course, like, hey, I have my own opinion. Okay, so that's one segment here. Now this one is more recent, but this is the one that I was like kind of laugh at the host over here. But I'll tell you when that is in a minute. So this one was made March 22nd. And so if I mark it over here, 22nd, right there, somewhere right there. So right before the earnings, right? Um, right before the earnings. So let's see. Now this one, when I was first saw this video, right, I was like, okay, this is the first segment that I feel like it's a little tilted towards bullishness, right? But it's still, there's still a negative drawn back to this particular tone of the um, segment. So let's listen in.
There are, Jenny, and that's the thing. There are still some profitability challenges for GameStop as a company, and there are really some sales challenges. But interesting enough, I'm not surprised to see the short interest start to fall, and I'll explain why in just a sec. But GameStop is still, of course, a core video game retailer, and we know that United States is about 65% of their total sales. In Europe and Australia and Canada is pretty much the remainder. But overall, the business itself seems to be stabilizing, at least from a financial standpoint. But the challenge still is what's going on with typical gaming. Gaming is now digital downloads. There's less demand for retailers like GameStop, but at the same time, they're still a very large company, and they are still generating sales. Now, they're going to be reporting next week, and the anticipated sales number is about $2 billion. Now, that's down considering last year at the same time, for the same quarter, it was about 2.23 billion. But at the same time, they're also estimated to grow their earnings to 25 cents versus 16 cents last year on an adjusted basis. But if you look at the stock,
So back then they were estimating that we're going to, make 25 cents, right? So we came out actually 22 cents for that quarter. So technically, it's not that much of a miss, but for some reason, they increase, from 25 cents to 29 cents. So tell me why all of a sudden, now I know like it's probably different analysis on here but it seems a bit like, okay, let me just let us try to convince people that it's much of more of a loss than it actually is, to try to price down, right? Again, conspiracy minded, but again, why the estimate suddenly went up from 25 to 29 or 30, right, cents per earnings. So again, like this is why I'm thinking like, hey, these analysts could skewed the result by increase, or for some company they low bar it, and then some company they like raise the bar so high that it's impossible for any company to hit. But yeah, so that's what I was noticing, right? See, this is the estimate back then, and then all of a sudden it comes up to 5 cents difference here. So perhaps again they were kind of expecting the company making more money than the company actually make, which is fine. I mean, like 20% down or miss, so to speak, is not that much of a hit when you look into what the company used to make, right? In terms of share for earnings here, I'm not talking about top line revenue. Of course, top line revenue is a growing pain that we have to address. I get it, but eventually, you're gonna have to expand at some point, right? It's called the point of capitulation. Um, the company is not going to just cut and cut and cut to the point where they're non-existent. It's like it's ridiculous to even think that. Because if at some point you're gonna reach the equilibrium, right, for the company to, like, just like this gentleman is saying, it's like stabilizing, right? And that's what we're trying to achieve. But we already achieved it over here, right here. This quarter right here, this is the equilibrium point. But yet the price still dropped. Why? Well, to create that psychological, turmoil, saying that, oh, look, they're missing, double miss. Revenue is down. Look, $300 million plus or whatever. Again, that's the headline. That's the headline. And revenue miss. Okay, miss from what? From, they increased the bar from 25 cents to 30 cents per earnings. So, yeah, again, to create that historical point of view of like, hey, this company is going down. And and then if you look at this point of view right here, you have, I'm sure Manuel remember this period very well, he's famously correct me if I'm wrong, Manuel. You were waiting for the single digit, right? And it never came. Well, it reached 99 something dollars a share at the week. There you go. $9.80. That's the lowest one. And of course, people were calling for $5, right? Oh, it's going under, it's going five, it's going lower. Again, this is the point of kind of capitulation here in terms of the price action, right? And again, if you listen to these type of segment, you're gonna be like, oh, okay, it's done. Okay, let's listen.
Obviously, this has been a huge multi-year story with the stock still, even in the last 5 years, higher by 400%, irrespective of the fact that it's down significantly from the meme hype, pinnacle that it had during that short squeeze event a few years back. But the company, at the end of the day, when you look at this as a retailer, they are expected to continue to show decelerating sales trends, and that's the fundamental problem with GameStop. So, put it into context, now they generated $5.7 billion in the last 4 quarters. If you go forward for the full year this year, they're expected to have sales around 5.5 billion, and next year, 2025, at 5.2 billion. So there's about a 4% deceleration estimate in sales. But while they're doing that, they are essentially cutting back expenses, because out of that 5.7 billion in sales that they generated, their operating loss was about 64 million and their net loss was only about 8 million. So they're cutting expenses while sales are decelerating, but they're still positive. So the growth rate is the
That is the most important thing, right? Yes, they cut on the storefront, but they are positive, net positive, right? Manual, uh, Jimmy was left for dead at $10. Kitty saved a lot of people portfolio. That's not true. The company saved. Uh, um, I think I disagree with that sentiment because Kitty wasn't in or wasn't back until the share price was like 17 already right here. Like Kitty wasn't here over here. If Kitty were to tweet over here, then okay, you might have gotten your point there. But again, when I bought into it, I was not factoring Kitty, a roaring Kitty coming in at all. And so that's a misnomer right there. And I think you're misleading by or misled by somebody. Maybe you have your own, conclusion here. But I think it's a bit skewed if you said stuff like that. Because again, like Rowan Kitty wasn't here. He tweeted around here somewhere. I think I don't remember, like May something. So he tweet that picture, you know, and that this run was gonna run no matter what. You see it in the option chain too. If you go back to my old live stream, we were monitoring that as well. So yes, the option turns out to be Keith, but it's not like it has anything to do. This run right here, yes, I admittedly, it has nothing to do with fundamental. It's all about option chain here. People buying calls and they exercise and all that stuff. And so that's the dynamic over here. The market maker probably was trying to hedge, all of that data hedging. I don't know. Again, like, that's too much complex for me to even talk about. But as far as the fundamental over here, if you look at the balance sheet, $10, right? For $10 a share, you have $4 worth of shareholder equity. So what does that mean? It means that for every share that you buy at $10, okay, you get close to 50% equity in the company. And a portion of that is straight up cash. So that has some value to that, right? If you don't know what that value is, then you might not know how to evaluate the company. Well, to say that you know Jimmy was left dead, no, no, because back then we were here. Hold on, I disagree with that. Yeah, so we were right here. This is the balance sheet that you see, the $6 million, and so fundamentally it was improving much more than people were thinking. Right? And again, even if it comes down to $5, like really, you wouldn't buy this company at $5. Come on, it's ridiculous to say that. I think the market was just overly too bearish, even over here, right? The same way when the whole thing's starting to take shape. Sorry, let me go back here. If you look at the beginning, since the beginning over here, the market was overly bearish for no freaking apparent reason. Yes, there were fear of like bankruptcy back then, right? There was no fear of bankruptcy here. None whatsoever, right? And so that's why that this is the opportunity created when people are misled or misinterpret this company to the downside. You get this type of reaction, right? Yes, some people might have sold and like I'm done with this, right? And then it's like trash the company because like I lose money. It's like, well, that's on you because you bet on the demise of this company, right? Or you bet on the short squeeze, that comes along with this, and your risk. If you risk the capital because you want to directionally, make billions of dollars using option, that's on you. You understand the option chain pretty well before you do that. If you don't, then you lose money. Don't blame it on the company itself, right? Just my whole point here. I love the volatility around Kitty, position, and tweets. Um, I make trades and hold GME. Exciting. Exciting again. I get it. Yes, the volatility traders out there is going to love coming back, right? And this is why you see a lot of like social media and all that stuff. But as an investor, you would want to buy when the volume is low, right? And so this is the opportunity for the investor out there who believe in the company, obviously, in the long term, who always looking out for volume decreasing. This is not the time to, well, it depends on who you are, right? To me, at the current price, because of the money that they have right now due to the capital raise, um, it would, okay, so currently at this junction right here, they have book value. Okay, book value. Sorry. So book value right now is around $10. Okay. So similarly over here, when you look at the book value back here, it's $4. So book value has increased. Shareholder equity has increased since then. So what do you think? The floor is going to be increased as well, right? In terms of the valuation of the company. So it's almost like you are buying company back when it was $15 a share, right? The equivalent, right? Somewhere around because now the current price have much more cash built into this, run. Of course, like people were like mad at Ryan Cohen or leadership to try to take advantage of the run. Hey, this is the nature of the company. The reason why they do an ATM is because they want retail to have it. They don't do any pipe deal, backdoor dealing to sell it to private equity or anything like that at a lower price than the market value. So whoever gobble up the shares, and it's kind of incredible too because they did two dilution here, right? And the share price still keep going up. So what does that mean? It means that the volatility, right, like you mentioned over here, and the volume, such a high demand that all of that dilution doesn't do much for the stock price. So is it algorithm? Is it market maker hedging, having to buy at a higher price forcefully? Well, that's remained to be seen, right? But the fact that leadership could do this without cratering the price. Imagine we raised $4 billion in the span of a couple weeks, right? With the company with the small cap like this, I mean, look at the market cap of this company, $10 billion, right? $10 billion. Any other company would have crashed the price down, way, way down. Um, so leadership has done this the right time, right? Imagine if they dilute over here, you know, it would have been not smart thing to do. The smartest thing is to do it now when the volume is coming in, people are talking about it more and all that stuff. And so it's a smart thing to do. And when they do that, book value increase for shareholders. So if you are a shareholder from here, you're not being diluted. You're actually increased in value by just the nature of this, quote unquote dilution. Um, and so, like I said, if you buy the company at $10, right over here, your share of, if the dilution is bad, your book value would have decreased, but it in fact increased. Michael, I'm thinking volatility on Monday. Get ready for some motion sickness. I know, right? Of course, like we know the share has been exercised. I was expecting something a little bit more exciting for Friday, but it's kind of, along the line of what, I was thinking too, because like the $30 range was a lot. There was a lot of like option chain there. So let me see. Um, like the level. Sorry, I haven't finished that segment. Option chain. Okay, so this is last time 71,000 contracts in the money currently, but if we were to close up here, another 35,000 contract would have been in the money, right? There's a lot of volume coming in here, meaning like people were probably buying and selling over here. Keep in mind the open interest is already been kind of like bought. Like this is the contract that's already been bought, and this is the volume coming in, meaning people are buying and selling in this particular column over here. You see a lot of outflow over here as well. So think of this as an inflow, and then this is an outflow. But again, you don't know whether people are buying or selling over here. It's just that giving you an idea of the exchange, of contracts over here, right? So you could say, people were selling off or buying, interacting with that particular chain. I'm sure a lot of people were panicking over here, or they're trying to again create that quote unquote gamma ram, if possible. Um, what they could do too is rolling this one to the next chain. So let's look at that one quick. Of course, this is the famous chain one, the most looked at, have more eyeballs into this one. So this one, you still have 100 contract left in the money. If market maker is successful at driving it down to 20, but imagine if it goes down to 20, how many people would be? Like, it's a no-brainer, right? If it's 20, then it's almost like you're buying this company at $10 all over again. So will they even, want to bring it down? So I'm hoping that they will. The idea of dumb stormtrooper here, right? So how many dumb stormtrooper out there? We'll see, right? The fact that people are still shorting this company, it's just so baffled to me. But again, it's the media, right? They're enticing people to do the same, thinking that this company is going to go under. Even Michael Pachter saying that at this rate, um, the company is going to be bankrupt 3 to 4 years from now. I'm like, how? How is that possible? They have $4 billion. um, whether retail is dumb enough, quote unquote. I don't think it's retail buying all this stuff, but because again, like when it was $10, like there's no volume here, right? When there's no volume here, retail keep buying like crazy, accumulating one share at a time, two shares at a time. We never move the market here, right? So what changed over here? Well, option, right? People buying call, exercising it, and got delivered shares. Um, and so that's the dynamic of the volatility. And all of a sudden, implied volatility for this company is like 400% when it used to be like 90. So again, this is why option traders are exciting now, but of course they're gonna lose their ASS, right? If they are on the wrong side of the trade here. um, and then they're gonna blame leadership, they're gonna blame the company all over again, and this thing is gonna happen next 3 years, 4 years, 5 years. You're never gonna These things would never gonna end if this is what people are doing. From my perspective though, like all of these people who are trading in and out are actually help price discovery for this particular company, because there's no price discovery before. Uh, and so market participant is going to push this price up or down based on, the bets and all that stuff. But that's why you don't care. I mean, that's why you shouldn't care about the price point. Of course, be careful, right? You have your game plan ready. That's why for me, there's a certain price point that I'm not willing to buy anymore. See what I mean? Or slow my buy rates. Currently, $30. Anything under $30 is like a steal for me. It's almost like buying this company at $15, like I said. So of course I'm gonna add to my portfolio, long term portfolio here. Um, Now if it goes crazy to these stratosphere over here, right? Again, assuming, yeah, I will take some profit, but not like again. I'm not gonna ever X out of this company the whole position here. I will have my moon back, so to speak, right? The bag that I hold that people keep saying you're a bag holder. Okay, all right. Let's see whether this bag is gonna amount to anything. Okay, so let's kind of finish up here. A couple more minutes.
Challenge for GameStop, not a balance sheet issue, because if we saw a balance sheet issue, which we can correlate to perhaps another one that went bankrupt, Bed Bath & Beyond, we talked about that company where it showed decelerating sales trends, but it was structurally unprofitable with a massive hole in its balance sheet with too much debt. That's not the case here for GameStop. If you look at their balance sheet, they have about $1.2 billion in cash, about $1 billion in inventory, 700 and so million dollars in assets, including some company-owned stores and real estate, and their total liabilities, including debt and of course taxes and other forms of liability is only about 1.8 billion. So they have a positive enterprise value. And I think that's one of the reasons why the GameStop as a stock continues to stick around. It's not necessarily as bad as one would consider comparing to other retailers that have gone bankrupt. This is a story of a stock that is shoring up its cash position, mitigating losses, but still doesn't have a plan to deal with sales decline.
George, where's the turnaround story come into play here, right? Because, okay, so that
So again, before this segment, the company hasn't announced, this is the plan, right? Was, adding more items to sell. So this is the turnaround plan. And to kind of assume ahead of time that this company has no plan to do that, it's just kind of it's what Ron Kitty was saying about how absence of evidence doesn't mean that it's not evidence of absence. This means that just because you don't see them doing something or tell you that they're doing something doesn't mean that they're not going to do anything, right? And so this is what the media is trying to tell you, or trying to get you to think that, oh, this leadership has no plan. Okay, well, they just don't tell you the plan. It just doesn't mean that they don't have any plan. So the plan was to kind of add more items to sell and uh, collectability, or expand category of collectibles. So here we go. Trading card is the most sought after, and now you have the ability to buy and sell trading cards if you choose, right? And so that's a good kind of like revenue increasing idea. So remain to be seen. We'll see how second quarter pans out. I'm expecting good things. If not, hey, it's a growing pain of having a business, right, in this environment. So.
financial narrative is sustainable, it seems like, and could be worse, right? But that's not enough to get you excited about the stock. As you mentioned, it's still kind of struggling at these lower levels here. I mean, even leg warmers, I feel like, made a turnaround, right? Where does GameStop come into play?
Okay, so that's a good question, Ben. I can't tell you the answer to that question. Obviously, once leases, which are part of their liabilities, maybe expire, they'll start closing down some of those stores and not re-up their leases. I see a business that's probably going to still contract in terms of the size and scale of their balance sheet. But, for all we know, based upon, the institutional ownership and the insider ownership, they may end up turning the company into a holding company in some capacity because that cash is worth a lot, and that cash could certainly be deployed, maybe not in the sense of deploying it to expand their existing operations. Maybe it's deployed as a holding company or an investment company. I can't say if that's going to be the case, but it's certainly a consideration. But at the same time, with their existing operations, you have to think about what they could do to their current retail stores to improve revenue growth. Could they transform them into some sort of gaming lounge place where people go to socialize? I can't say if that is what they have plans to do, but they still have infrastructure. They still have a good balance sheet. They just have to deal with the sales decline. So I'm not a turnaround expert. All I can tell you is that looking at the trend, obviously the stock is down 45% over the last year, but it's starting to find some bottoming action, not because sales are flat, they're still in decline, but their operating expenses are coming down faster than the sales are declining, and they're raising cash. So you may end up seeing a stock that does nothing, for lack of a better word, for quite some time as they try to figure out how to reconvert their business.
So this point right here is like, what the hell, right? Of course, he bring up good points, right? But I think he's underplaying at that moment in time, right? Where it's kind of like, again, this is what the media is trying to get you to do. It's just like get you to feel cold feet about this company. Um, Mind you, this is when the company was like at $13. Right? It's like, oh, this company is not going to do anything for a while, so don't be expecting so much about the company. Even though he's like bringing up the point where, okay, the underlying business is quote unquote struggling, but their operating expenses come down faster than the burn, the revenue, meaning that the net income is a lot higher. is trending up the other way, meaning it's good. Let's see. Here we go. So he's saying that see operating expenses coming down faster than the revenue declining, right? So in turns, you would create this type of kind of a dynamic where net income went up, meaning they are profitable now, right? Trailing 12, again, this is trailing 12. That's why it's important to look at the trailing 12 rather than just quarter by quarter, right? Because you're not seeing that trend if you do that. So the point that he was kind of underplaying or undermining, and the lady's gonna jump in a minute to tell you what you should look into this company. Let me, but is the holding company part, right? The fact that they have cash, they could make decision very swiftly, like I said before, and so to underplay that is so as if you know, they want you to kind of wait. Don't buy this company yet until the institution get it in first. Then, then you should buy GME at $100 a share, right? $80 a share. Um, and so again, this is the trick that they do, right? So let's listen in, and I'm sure this lady's gonna jump in.
Try to figure out how to reconvert their business.
Yeah, George, there's some serious issues that are very evident to see. You don't even have to frankly do much digging into the fundamental story, but I do hope that maybe with some of this weakness priced in, any surprise to the upside could be perceived as a positive. We'll have to wait and see once we get those results next week, but we will leave it there. Great insight as always.
Okay, so don't look into the balance sheet too much. We already know that we already know that this company is going bankrupt, even though they have money. Like it's just so crazy to me that again, this is what they do. And I hate this about news segments. It should not be this way. It should be like, okay, debate on both sides, right? The bull cases and the bear cases. Financial news is supposed to be unbiased towards any direction, but it seems like, and this is why it's such a slam dunk in my opinion. It's like, okay, there's something here in this company that they don't want you to look into. And so again, contrarian, right? It's better to kind of come with your own conclusion, analyze it based on your own understanding of things. If you don't understand this company, then don't invest in this company, right? Don't look into it. But if you just investing in based on the hype and all that stuff, that's when you get burned, right? That's when people are like, so the volatility traders out there, when they lose money, what do? They blame it on the company. This company doesn't do shit, right? Well, because you're traders, right? You're not here for the success of the company, and then you get mad by the fact that people are holding this company to whatever height that they think the company is worth. Um, uh, the value of this company is much deeper than you ever thought of, right? And the fact that they have more leeway, more runway, and even better, position that they were 3 years ago, it speaks volume. And if you don't understand that, you might have to wait until they've proven to you time and again that, hey, this company is worth something. At the very least, the income, like the net income from now on, is going to be like, my conservative view is like $300 million. I mean, I think I have my. Oh, shoot. It's 9 o'clock already? Man. I'm thinking, what the heck? It's ridiculous. Every time I talk about GameStop, it's just like, I'm looking for my sheets over here. You guys seen it before. All right. So this is my strategy moving forward. Obviously, this is just a estimate. We already got the number. I just haven't filled it in yet. So of course, I still have my moon back over here intact. And the reason why I kind of increased this used to be like 22, and then it went up to 30, and now it's 50. The reason why I got this number is due to right here, book value, right? Because of the $4 billion in shareholder equity. Again, give or take, right? It's not a true number, but hey, 11. Michael, what is it? Wetbush increased their price target to $11. That's pretty good, right? In my opinion. So at least the bearish of them all has increased price target to 11. So that's good. At least that's a plus, right? So there's some sort of victory that is here to come. Now, of course, she doesn't want you to look into the balance sheets. Just have to wait because it's gonna trading sideways for a while. So there you go. And this is the reason why they want you to wait, because perhaps somebody knew that they're gonna send it up. Again, my assessment on things, my analysis on the news. Sometimes I'm just like, oh, this is like, just do the opposite, right? Not always, not always. I'm not saying to do all the that, but it just again. Okay, so let me try to end this here in a minute. Here, let me show you what this video was intended to show. Um, Fun shorting GameStop, right? Okay, Michael. People have been talking about exercise by Rowan Kitty being still under the old T+2 rule. Okay, so Monday and Tuesday then, which could increase volatility in Monday. Your thoughts? I have no idea. Whatever market mechanic is happening. All I know is that if it's like below my price target, I'm just gonna buy. As far as like betting up and down, of course I have a few call options. Um, long dated one. So let me see. I did some pool man covered call for this week. So I'm planning to kind of like wait and see what's happening to with the shareholder meeting on Monday. Yeah, of course, like sitting and watch, waiting until I know more about what that money is gonna use for. Um, yeah, uh, I hope Brian Cohen just say a few words and then just mic drop, right? And just say nothing. And it's like, okay, when we file something, they will find out what we're doing. So that would be like, so there's a speculation too, right? That Rowan Kitty is going to be sitting on the board of director. I mean, that would be like the icing on the cake, right? Of course, it's just speculation. But the fact that he's the fourth largest shareholder, it just solidified that he's been um, kind of a long term shareholder through and through, right? Because he's supporting the company. I mean, the company has value. I mean, 23 dollar cost average. That's like a pretty good price to get in my opinion, right? So where was like he got his share at $20 a share right there. So let's just say right here, this is wrong, Kitty. So let me put the red, like a red banana over here. Here we go. So that's his cost average around there, which is a pretty good price point to get into this company. Uh, that means that for every shares that he owned at 23, you get $10 worth of shareholder equity, right? And so that's a no-brainer. Like I said, that would be you. It's almost like you're buying over here when it was like 17 or $16 over here, right? Because the shareholder equity back then, before they make all of this money from this run, was only $4. So to me, again, there's value over here. And imagine too, like he has 9 million shares, right? So that means if the company pays dividends in the near future, like which is not far off, if you look at the history of dividend for this company, they used to pay dividend. You guys, look, 30 cents per shares. So it's not far off that they will eventually going up to that point again. I mean, think about how those interest payment that we would just park into marketable security could use to be, hey, if you own this company, you're gonna get some more dividends on this. I mean, if you look at the dividends, even just 10 cents per share. I mean, think about this. Okay, so $9 million or 9 million shares, right? Times uh, 10 cents. That's $90,000 a year just owning shares alone, right? And not to mention the value appreciation that comes from the shares, you know, being the board of director and all that stuff again. Like there's some restriction here, right? Who knows? Um, it's again a fun speculation to have, but there's some real value here to have shares rather than call options. And of course, he could have, cash out at $700 million, right? But he settled with 9 million shares instead, 4 million shares more than um, he had before. So close to double his holding. And apparently that amount right there, 9 million something, is the same as what Ryan Cohen got in before, right there. The same exact amount of Ryan Cohen. So is that a signal of him like I'm gonna join a board here? Like it's possible, right? Possible. But yeah, it's fun to think about. So 90,000 $90,000, and he still have $6 million, to do whatever he wants to. So he's pretty set, in terms of his income here. I'm not imagining he would sell all $9 million, 9 million shares of GME right now. Like people are suggesting that he's dumping, oh, he's gonna dump on your head. Just like the same way when Ryan Cohen got in first time, it's like, oh, you think he's not gonna make money on this? He's just here for the motorcycle. 3 years later, the guy is still here. Like, see the sentiment that people have on um, the current point of view. Like sometimes, again, that's why it's called FUD for a reason, right? Fear, uncertainty, and doubt to place on the investment that you have, saying that you're dumb for some reason that this company is not worth anything, even though it is a greatest turnaround company ever. History in the history of the turnarounds of the turnarounds. Okay, this is the successful turnaround company that people should be talking about. But instead, you have people badmouthing it, which is fine. To me, this is an opportunity for me to accumulate shares at a lower price because people are missing out on it, right? Of course, I'm gonna, try my best to accumulate more shares. And so again, yeah, badmouth it. People short it. Like if you want to short this company, welcome to. All right. Would be great if computer share server would work next week to finally hear the shareholder meeting. Okay. Yeah. People have been talking about it. Okay. Sorry. Just curious if DOE shares have to be delivered to him by close of okay, Monday, business Monday, then the open market might be where they have to get them. Which will increase the price. Yeah, I mean, there might be a gap up. Who knows, right? However, they deliver the shares, that's up to them, and how many people exercise along with Keith too, right? So, and then of course, there's more people betting, new bets coming in as well to try to get that sweet premium, right? Um, and so, yeah, that's why again, I'm not going to speculate on what's going to happen. I mean, they could dump it down too. Who knows? But all I know is that if it's under 30, I'm gonna get more. All right, so that's that, and then let me show you this one real quick. Okay, so before I go, okay, so fund that shorts GameStop. Now, when it's red, it means that the position is closed, right? And then green, the people are opening new short position. So this is no change. They have a short position here. I think that's what it means when they have like negative shares, right? So there's some funds still, short. Not many millions of shares or anything like that. Just a couple hundred thousands shares. Seems like a few closed their position over here. I think this is the red, um, the red one. So they closed the entire position. I don't know who these people are. Goldman Sachs closed their entire position here and closed their entire position here. Bank of America, not quite sure what this means. I need to do more research on that. But it seems like that means they are long or short. Why is this negative? I wonder. Hold on. Right, so 0. Negative, maybe they're forced to buy it at a higher price. I don't know. It's either way. Oh, it says short right here. Sorry. I'm just like, okay. So short means straight up shares. I think like they buy or short the shares, so that's why it's negative. And this one just buying puts, so they buy puts to bet on the price on the option chain, right? And so you have yeah, look, millions of shares right here. So that represent the contracts. 100,000 contract over here, 300,000 contract, right? I'm kind of assuming here because it says, oh, that's just representative of shares, not contracts. So, but it says right here, right? Puts 3 million. Is it shares? Yeah, shares. Okay, got it. So it's not contract, it's shares. So whoever these people are, they're shorting GME 3.4 million shares there. Okay, there you go. And then people are adding more over here. Square Point. So I guess enough to have a put contract to equate to 26,000 shares. Okay, that makes sense. Of course, Citadel is shorting this as well. Bank of America again. This guy is adding back in May 14, right there. Yeah, so there's a ton of people adding and closing their position. Lots of closed position over here. So yeah, I mean, people bet up and down. It really depends on what sentiment they have. But hey, there's good things in this company here. Now let's look at the forecast. Obviously, I showed this one before. Currently, they have new price target right here, but the projected revenue is $2 billion in increase, right? $2 billion in increase by March of 2026. So yeah, we have this. We have this right here. I mean, look at this. At least, at the very least, it's slowly but surely turning around to the place where institution might want to have a piece of it as well. So remain to be seen, right? We want to at least come out positive 3 quarters in a row. When that happens, it's still 2 more quarters to go, right? Metric sheets. What else here? Oh, I don't pay. Let's see. Income statement. Nope, not doing well. Okay, so let's go on the overview. Yeah, so they have not updated the most recent development yet. So this metric is going to be skewed a bit here. Book to value, all of that. Okay. And let me look at this right here. So yeah, there's a lot of speculation over here. What's Keith gonna do? Whether he's gonna join the board or not. That's remained to be seen. And then I saw Larry Chain, and of course, this is the volatility. People are now talking about it again. This is the Charlie here. He's talking about. I think he posed something about the income that comes from right here. So just the income from interest alone, you're gonna get for $4 billion, right? $240 million a year just from that. So it's a pretty strong balance sheet here. Be the stupidest thing that people are just shorting this thing, right? Makes no sense at all. If you look at the short percentage, short float, oh, 14%. Wow, somebody close. Short interest. Let's see. Okay, so I guess they were closing their position. Okay, all right. I guess so much volume already. So it used to be 24% here. So that means it just shows me that shorters are forced to short at a loss or buy into the company at a loss here. Closing their position as fast as they can. Um, and of course, that doesn't include retail, right? Retail shorting or adding more to the put size and all that stuff. That could be a skewed point of view as well. Hold on, let me. Sorry, you guys, I haven't. I'm kind of doing a little bit of research here too. I'm gonna let you go in a minute. Wonder if the chain tells you that. Not that one. Okay, so I guess they're closing their position. Who knows? Okay, short exams over here. Okay. I mean, I don't know how to speculate about this. Short position down to 14. Um, Perhaps that spike right here is what they're closing. Right there. Boom. Close. Close. So another close. Who knows? So that's the big hurrah, perhaps. Yeah. Anyway, so just be careful if you're playing up and down this company. Understand what you're getting yourself into. And good luck. All right, guys, I have to go. Okay, Michael. Thank you, Mimar. Yes,